Hi everyone. In this video we will talk when is Bitcoin crashing again? So before starting this video, please like it and subscribe to our channel for the future updates. Bitcoin's massive rally is still going on. As of this writing, the most well-known and valuable cryptocurrency is trading above $47,000, down slightly from its all-time high set on Thursday morning. Since November, Bitcoin has nearly tripled in value, and has gained more than 50% this year. And there's some logic to the optimism. Specifically, businesses are becoming more comfortable with Bitcoin adoption. This week, BTC received a major boost when Tesla, Nasdaq, TSLA, announced that it would purchase $1.5 billion worth of the cryptocurrency. MicroStrategy, Nasdaq, MSTR, and payment companies Square, NYSE, SQ, and PayPal were among the first to adopt the electric vehicle technology, Nasdaq, PYPL. The rally that has been going on for the past 4 months is still going strong. Bitcoin was only established in 2009. It broke the $1 barrier for the first time nearly a decade ago. In 10 years, BTC has appreciated by 4,700,000%, give or take. In the history of mankind, there have been few assets that have elicited such a response. To put it another way, Bitcoin has made people millionaires. The rally, however, has not been without its share of turbulence. In fact, Bitcoin's experience has been marked by both volatility and crashes. Many of those crashes began in similar circumstances to this one, when everything appeared to be going swimmingly and more upside seemed almost certain. Historically, another reversal is almost certain. That doesn't mean investors should sell their Bitcoins right away, but they should know the risks. Yes, Bitcoin's going to zero. The current Bitcoin crash will continue and crash again if there is a rally. Several arguments led people into investing in Bitcoin. BTC will take over the world. Everyone will be paid in BTC and spend it in coffee shops around the world. Number 1 is doubtful at first, and it has the added problem that even if it gains traction in those areas, governments will not allow it to happen. If you're trading $1 million Bitcoins, you'll have to pay tax on capital gains. In fact, you owe capital gains or income tax in the US whenever you spend BTC, which makes sense even if it's not intuitively obvious. You're a criminal if you don't pay taxes. If enough people do it, and the government loses a substantial amount of tax revenue, and/or its money laundering aspect becomes too annoying, they will simply outlaw BTC trading. Number 2 seems out of the question. BTC trading is inherently inefficient, to the extent that the current minuscule number of exchanges consumes more electricity than Ireland, or most of the world. Bitcoin mining consumes over 159 countries a year. The number of transactions handled by Visa and beyond would need thousands of times as much electricity. To blacken the sky, we would have to build many coal power plants worldwide. What purpose? Ultimately, what's the point? Why would we sacrifice the environment, and spend trillions building all that infrastructure, for my Starbucks MasterCard, which is faster, cheaper, and easier to use? Don't think of Lightning Network. The idea is to give up the security BTC network provides in exchange for relatively fast transactions. Why wouldn't I use my Visa? Number 3 is ultimately pure speculative mania. The BTC is terrifying. That's a parabolic bubble's end. People that say, price is down, perfect entry point. You're getting twice as many coins now. Ellipsis. Either they don't understand how it works, or they're lying to you. Yeah, but Apple's not BTC. That's mystery. Blockchain may be the next big thing, and we may all use some coin in the future. But BTC isn't. Despite its first mover advantage, it doesn't technically offer more than tulip bulbs, possibly less. Plant your bulbs and enjoy flowers. The history of Bitcoin crashes, for skeptics, of which I am still one, early 2021 looks eerily similar to late 2017. Bitcoin was also skyrocketing at the time. New Year's Day 2017 saw Bitcoin surpass $1,000 for the first time. It had risen to more than $18,000 by December. The possibility of earning $20,000 or more appeared to be a foregone conclusion. Cryptocurrencies of all types were surging in value. Initial coin offerings, ICOs, were all the rage a few years ago. However, while 2017 was a great year, 2018 was almost as bad. By February, the value of Bitcoin had been halved in US dollars. By the end of the year, it had dropped below $4,000 once again. According to a report at the time, the cryptocurrency's 2018 decline was not the first time it had experienced such a steep drop. That's not even close. BTC dropped 49% twice in 2012, with one of the drops resulting in a 3-day, 57% penalty. The following year, an incredible 83% drop occurred over a 3-day period. BTC's value dropped by half on November 19, 2013. Later that month, it began a year-long decline, falling from $1,163 to just $152.40. Even in 2017, which was a banner year for Bitcoin, it dropped 30% or more 5 times. Then there was the roughly 80% drop that started toward the end of that year. In recent weeks, the volatility has decreased slightly in comparison to early trading. Broader adoption and a larger investor base are expected to keep the trend going in the future. Still, this isn't the first time we've seen something like this. Bitcoin can move quickly north, but it can also move south at a similar rate, as it has done in the past. 3 catalysts. In addition, there are 2 catalysts that could cause another decline in 2021. The first is the parabolic gains seen across asset classes, not just in Bitcoin. A number of stocks have gone crazy in recent weeks. Riot Blockchain, Nasdaq, Riot, and Marathon Patent aren't the only miners in this category. Nasdaq, Mara. It even extends to so-called Reddit stocks, such as GameStop, NYSE, GME, and AMC Entertainment, NYSE, AMC, NYSE, AMC. The value of commodities has skyrocketed. Even in the crypto world, Dogecoin, which began as a joke, now has a market cap of $9 billion. There will be crashes in other markets, whether they are cryptos, stocks, or commodities. And it's possible that those crashes will affect Bitcoin. Surely, Bitcoin and other hot assets are owned by the same people. Owners who are experiencing losses elsewhere are likely to de-risk their investments by converting BTC to USD. In addition, there's the regulatory environment to consider. Janet Yellen, the U.S. Treasury Secretary, has expressed her concerns about cryptocurrencies, such as Bitcoin, on numerous occasions and in public. Yellen isn't going to be able to outlaw Bitcoin trading and drive the price to zero. However, she has the ability to influence potentially bullish catalysts, such as the long-awaited launch of an exchange-traded fund, which would need to be approved by the U.S. Securities and Exchange Commission. Finally, there's always the possibility that Bitcoin has gone too far. It's reasonable to assume that at least some of the new Bitcoin buyers since December aren't die-hard crypto enthusiasts who believe Bitcoin can eliminate the need for large financial institutions. They're simply partaking in the festivities. There may have been some weak hands who have jumped on board, to use modern trader jargon. They aren't always the type to stick it out through periods of high volatility. The case for staying. It bears repeating. These dangers do not necessitate a hasty sale of one's Bitcoin. In fact, an investor can believe that both a Bitcoin will crash again and b Bitcoin is still worth owning right now for a variety of reasons. First, the crash could still be a long way off, and there could be more upside ahead. In early 2017, an analyst could have predicted that Bitcoin would crash within a year. Even if a trader had followed that advice, he or she would have missed out on gains of at least 200%. This rally does not need to come to a conclusion right away. Second, there's a case to be made that attempting to predict when the crash will occur is a fool's errand. Stock market timing is well known to be a futile endeavor. The history of Bitcoin suggests that it will be no different. Long-term Bitcoin, or any other cryptocurrency, bulls can reasonably argue that extreme volatility is simply a fact of life, at least for the time being. However, if the long-term bull case holds true, the ability to ride out such extreme volatility will pay off, even if it comes at the expense of some short-term pain. Neither of these points is illogical. Crypto investors, on the other hand, should be aware that this isn't the first time we've seen this. Short-term bursts of optimism, such as the one we're seeing right now, almost always lead to a reversal. I don't think it will be any different this time, though it will be interesting to see how steep the reversal is and where it starts. What do you think about the video? Was it helpful or not? Let us know in the comment section below. If you enjoy this video and want to hear from us again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.